Welcome back, everybody. Credit card debt hitting a new record high, bank lending tightening, interest rates on mortgages way up. Here to talk about these trends, financial planner Gregory Ricks. Always good to see you, Gregory, and thanks for joining us. $1 trillion credit card debt. It can be a killer to American families, can it?
It really can, and people are leaning on that more. Result of the Fed tightening and things slowing, and we've seen they keep using credit, and people are leaning on that more to take care of their need and to keep the spending up. You know, one thing the Fed has to keep a lookout for, because 68% of GDP is consumer spending. Yeah. So in a way, if we slow down consumer spending, we're slowing the economy, which leads to that recession, which they're striving for the first time in a century to get it, to get a soft landing.
Some of the biggest mistakes people make when it comes to racking up credit card debt and dealing with it.
Minimum payments. If you're using credit, it should be about temporary, pay it off quickly, and people are shifting to minimum payments. Missing payments is the horrible part of it. Then that hurts your credit down the road. And because of things tightening up and maybe their incomes are strapped, they don't have emergency money. They're maxing out credit, which also impacts their utilization ratio on the credit report.
You're racing against interest rates when you're just making the interest on your credit card debt, when you're just making minimum payments, right?
Yeah,
it's you're losing that battle.
It's like treating your revolving debt like a 30-year mortgage. You're never getting away from it.
Student loans are that way too, unfortunately. Missing payments you talked about, the minimum payments, carrying a high balance. What do you suggest people do? I mean, they always say if you have multiple things, consolidate it. Do you like consolidation?
I like consolidation, but still you're using up credit utilization trying to do that. So this is kind of like business management of your household. What's your inflow versus outflow? And if you don't have enough inflow of cash, you've got more going out, then they're using credit because they don't have emergency money. It's time to increase the cash flow. You either got to cut spending or increase income. That might be picking up a second job, asking for a raise, reducing your budget. This is simple math.
It's math 101. Actually.
It is.
I wish we had more time. Let's shift gears. 20-year high on mortgage rates right now. I think it was 7.09% announced this week. What do you think that's going to, the ripple effect on that's going to be?
Well, we need more houses. There's such housing demand. People are mentally adjusting to mortgage rates there. We're seeing construction and building has increased quite a bit the last quarter is what data is showing. We've just got to adjust people to, date the rate. Marry the house, a friend of mine always says.
Well, we remember,
knowing you can refinance it when it drops.
Yeah, and mid to late 70s, I think it was 15, 18, 20%. And then we kind of got spoiled, but now this is pretty high and it could hurt. Banks are tightening their lending standards right now, and that could be trouble for businesses and consumers. What do you think about that? That's all with the Fed and everything on the interest rate?
Fed has put pressure on them. Sketchy loans are getting them in trouble. They've got to keep more cash flow on hand, so they have to reduce their risk. So they're they're in the business of loaning money, but they're going to make better loans, stronger criteria, so they don't have this to go the wrong way. Because once again, they see credit utilization increasing. They're worried about people being able to make the payments on houses, cars, credit cards. This goes for businesses as well. If they make a loan, they need to be certain you're going to make those payments. They don't need to be left holding that when the feds come in and look at their books.
I got 20 seconds. I'm going to have you back. The too big to fail banks versus these regional and community banks. These regional and community banks in trouble, you think?
We're going to see more mergers, less smaller community banks. It's just they're getting jammed up. And digitally what happens, if the word gets out, bank's in trouble, you don't have to go down and get in line. You just move it online. So also that quickens the pace, even though it may not be true. They've got to have more liquidity, and so that will be made better by banks merging.
Gregory Ricks, again, we'll have to have you back. There's so much simmering out there. Thanks so much for being with us.
Thank you for having me.
Appreciate it. And thanks for watching. I'll see you back here next Sunday morning.